following is an update and technical analysis on the US dollar index futures displayed throughout the daily interval. And in my previous video titled "The Dollar Index Technical Analysis Futures Are Constructing Within a Head and Shoulder Neckline," which had completely snapped, put in a breakdown sell signal. This was ushered in about a month ago on March 9th, 2025. Today is May 3rd, 2025. And that was your solidified breakdown. Watch for a flush. Watch for this level, a big key technical fib, 382 fib retracement level at the 103.74 handle. Watch for it to break. Watch for additional selling pressure and some additional targets down to the 236 fibs. Ultimately, the 0 fib at the 100 mark, major reactionary low level. And here's the update. And the entirety of the trade from the 103 handle was good for let's call it a 6% crash to the downside, a significant big event for a currency on a radical move of that magnitude. And now I believe we are within the beginning stages where we had this huge bearish macro structure with now gearing up for some potential short-term bullish reversal structure here. This rounded top descending parabolic downtrend price resistance level from the 2024 major reactionary high initiated a deep correction, breaking all key support fib levels along the way. Recent now breakout above this short-term descending price resistance level suggests that the first signal of a potential reversal attempt here. Price is currently testing the horizontal resistance near the 150 level, which served as former support in Q4 of 2024. Long traders, bull traders they must hold at all cost above the 99.40 and 99.80 handle. Consolidate the breakout while reclaiming the 101 handle up above for room to retrace deeper into some of the fib cluster zones up above. And here is your stop target down below. You could begin the scaling out process if and when long traders were to break down, and short sellers feast on the handle. Meanwhile, this is a validated, solidified breakout candle close followed by a backtest that was heavily defended by levered long traders and or bull traders. And these are some key additional targets up above to hone in on. First target on a dollar cost average move up to the 105 handle for a 1.6% move to the upside, up to the 236 fibs at the 102.20 for a 3.3% in gains. Things get really bullish and we break past that level on a huge retracement back up to the 104 handle for 5.6% in gains. And if things get extremely bullish, things start breaking down on a stronger dollar, you're looking at a 7.9, I'll call it almost an 8% rally to the upside. We do have some of the beginning stages of bullish divergence. The custom early indicator of the stochastics 1033 customized indicator is signaling a bullish divergence there, with the moving average convergence line now curling up toward the zero line threshold, with the histogram turning less negative, with showing early reversal signal forming here on a bullish crossover. The ADX DMI oscillator still shows negative directional dominance, but the weakening trend strength is suggesting that there could be some bearish exhaustion here for any short sellers and or bear traders to begin piling in. This is a strong early trend signal, especially within the customized stochastics 1033 here. This is early stage bullish recovery across multiple key technical momentum indicators, especially the stochastics divergence and the MACD. I believe this is a great risk-reward structure forming after a deep flush. The fib clusters are lining up well with historical supply across this entire span of time and sphere across that entire region. The dollar index is carving out a rounded top parabolic decline, and now we're seeing and witnessing the first spark of bullish structure forming within a clean breakout above a parabolic descending price resistance level. But if projected, this remains a bear market rally inside a much larger downtrend price support and price range. With the Federal Reserve maintaining a data-driven approach and U.S. yields attracting global capital at these levels, the dollar could remain the preferred safe haven. Amid trade tensions and economic uncertainties, make no mistake about it, the dollar's liquidity and resilience could continue to reinforce its dominance in a broad-based powerful snapback rally.